Hello and welcome to Portfolio Matters Share Talk, where I will be giving a presentation on Zinnwald Lithium. But before we go any further, here's Keith with the disclaimer.
Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end.
Thank you, Keith. Zinnwald Lithium, formerly called Eris Resources, is a United Kingdom-based mineral exploration and development company. So as of yesterday, the share price was 15.1p with a market cap of 31 million. It has net cash of 4.8 million, an enterprise value of 27 million. It's a European play on lithium batteries, electric vehicles, and renewable energy storage in Geiger batteries. It has a lithium mine in Germany near the Czech border and a projected NPV significantly in excess of the market capitalization. Its projected annual EBITDA is only around 1 times the current market cap. It's working in a positive regulatory environment in Europe. It is, of course, vulnerable to swings in the price of lithium. And Bacanora Lithium, which we will go into shortly, owns a substantial quantity of this mine and the company, and may be a cheaper way in. Zinnwald owns 50% of the Zinnwald mine, and Bacanora Lithium owns the other 50%. It's an advanced integrated lithium project on the German-Czech border near Dresden, and designed to produce a suite of value-added downstream battery-grade lithium products. It has 2 other assets, which is placed under care and maintenance whilst it focuses on developing the lithium mine, and it's no longer seeking to do any development here, but rather looking for either a partner or a purchaser. So we won't go into those. I suspect their value is not very great as they currently are. So there's the share price. It's bumping around its high for the last year and a half. It's gone up significantly since the low of March 2020, where it was around about 3p, so it's gone up 5-fold. And since the summer of 2020, it's trebled. So clearly there's been significant move in the share price, and the question is, has it gone far enough? So established in 2012 as a mineral exploration and development company, it focuses on new ore deposits in the European jurisdictions. And at the end of October 2020, it did a reverse takeover of Bacanora Lithium's interest in Deutsche Lithium. And simultaneously, the company's name was changed from Eris Resources to Zinnwald Lithium. Now, this gave it a 50% interest in Deutsche Lithium, which was developing the Zinnwald Lithium project in Germany. And Bacanora Lithium became a major shareholder of Zinnwald with a 44% stake in the company. Now that means that Bacanora actually has a 72% stake in the Zinnwald project. Price of lithium carbonate, which regular viewers will know we look at every week in our weekly update. It's doubled since the summer of, or late autumn, summer-autumn of 2020. The regulatory background is very positive. So Europe has a target of becoming carbon neutral by 2050. And in September 2020, the European Commission announced that it was prioritizing the securing of critical metals through exploration and investment, critical metals for environmentally friendly energy consumption and generation. And they said at that time that for electric vehicle batteries and energy storage, the EU would need up to 18 times more lithium and 5 times more cobalt in 2030. In other words, a massive uplift in demand. So Zinnwald itself has a robust mine plan with a 30-year feasibility study, which equates to extracting less than 50% of the currently identified resource, and a mining license is in place, and it's working to transition from the developer of the mine to a producer. So it has the infrastructure and the research and the funding ready to start developing this mine. So the feasibility study determined that the annual production of lithium was likely to be 7,285 tonnes of lithium carbonate. It also produces potassium sulfate as a byproduct. The feasibility study was based on a 30-year project life with a total resource of 757,000 tonnes of lithium carbonate.
Wow.
Measured and inferred. Construction capital costs 159 million euros and a construction period of less than 24 months. Now, the whole project has a net present value of 428 million euros, and we'll have a look at that in a moment in some more detail. And the average life of mine annual EBITDA estimate is 58 million euros per year. Now, bear in mind, however, that Zinnwald only owns 50% of this mine. So Zinnwald's share is 214 million euros for the NPV and 29 million euros for the EBITDA. And it's quite important to bear that in mind. The feasibility study was also done on the pricing of lithium fluoride, and they averaged that from a number of sources. And for the analysis, they using a price of 22,000 euros a tonne for battery grade lithium fluoride. Now, I've been unable to find a price for lithium fluoride, so if any of our viewers know what it is or know a source of it, that would be really interesting. So I haven't been able to determine what's happened to the price of lithium fluoride recently. So for my thinking around this, I've just been using lithium carbonate as a proxy for the lithium fluoride price. This is the NPV Sensitivity Analysis, and the base case is at an NPV of 270 million euros. But as we know from the feasibility study they publish, they are saying that the NPV of the mine is actually 428 million euros, which looks like it is the base case plus 20% increment in the price of lithium fluoride. Now, the price of lithium carbonate, which I can get, is increased by 15% since the feasibility study was done. So it seems reasonable to assume that the same thing roughly has happened to the price of lithium fluoride, but they appear to be operating their NPV estimate in their presentations as base case plus 20%. This is a slide from the corporate presentation showing that there's going to be significant demand for additional lithium in the years to come. And the one of particular interest, I think, is the one on the bottom left-hand corner, where at least 60 new lithium battery gigafactories are planned in Europe over the next 10 years, increasing capacity 3 to 4-fold to 400 gigawatt hours. So that's going to be a huge demand for lithium. And this is a chart showing what we all know, that there is a massive incremental increase in demand anticipated over the next 10 years for lithium. And the mine, Zinnwald mine, as you can see, just in Germany, on the border with Czechoslovakia, is superbly located to supply lithium to a multitude of manufacturers based in Europe. We had a look at Bacanora Lithium because it owns effectively 72% of the Zinnwald mine and 50% of the Zinnwald company. And Bacanora has a second project in Mexico, which is slated to produce 35,000 tonnes per annum of lithium carbonate. So Bacanora owns directly through Zinnwald 72% of the Zinnwald mine, as we've discussed. And that is equivalent to Bacanora being the recipients of 5,000 tonnes per annum of lithium carbonate production. Currently valued, lithium fluoride production, I beg your pardon, which is currently valued at the value of £30 million, value of Zinnwald Lithium. So on an equivalent basis, Bacanora's total output of 35,000 tonnes of lithium carbonate plus 5,000 tonnes from Zinnwald, you would expect to be valued around £240 million, but in fact, the market cap of Bacanora's is actually 152 million. So is Bacanora a cheaper way into the Zinnwald project? Well, I think that rather depends on your view of the Mexican project that Bacanora has. So it's a difficult one to call, but it's certainly interesting that Bacanora owns so much of Zinnwald. The other thing that makes it difficult is because Zinnwald have used lithium fluoride for their cash flow and their feasibility study, and Bacanora is using lithium carbonate, it's a little bit difficult to compare the two. So the positives: the Zinnwald Lithium mine has an NP of 428 million, 50% of which is owned by Zinnwald, which is equivalent to approximately 184 million at current exchange rate. And the annual mine life EBITDA, Zinnwald has a share of around about 25 million. So in fact, the market cap is around about 1/6 of the NPV and 1 times the EBITDA that Zinnwald PLC has a share of. The fact that Bacanora owns 50% of the mine and their large shareholding in Zinnwald clearly shows that they've got confidence in the project. So it looks to me as if there is a significant undervaluation of Zinnwald under the assumptions that are made in the DFS. The negatives: well, it has the usual geological risks of a mine that hasn't yet been built, and the ground has yet to be broken, so production is still some way off. The apparent confusion in the company's documentation over the net present value quoted versus the base case net present value is a little bit unnerving, I think, because it makes it less clear what the figures should be, and also the fact that they quote the full NPV rather than their share of the NPV in their presentations is likewise, I find, a little confusing. The NPV is very sensitive to the production of lithium, which, as we all know, can be volatile. And finally, and this goes for any electric vehicle investment, is that there are a lot of assumptions have been made in the demand for lithium, the lithium case, for electric vehicles, including the uptake or the relatively small uptake of hydrogen-powered vehicles as an alternative to lithium batteried electric vehicles, and the actual pace of growth of electric vehicles, which may actually fundamentally be limited by infrastructure and generation capacity. And this point doesn't really seem to have hit the mainstream yet, but if we can't generate sufficient electricity to charge the cars, then, or don't have the infrastructure to charge the cars, then we can't make them. So in summary, it's a European play on lithium batteries, electric vehicles and renewable energy storage. Its projected NPV is significantly in excess of the market cap. Annual EBITDA is only about 1 times the current market cap. And positive regulatory environment. It is vulnerable to swings in the price of lithium. And Bacanora may be a cheaper way in, but as I say, I think the comparison is difficult to do.
Right, thank you, Richard. I have a few questions though. First of all, the financing, have they got it, and when does this start?
They have £4.5 million of cash on the balance sheet, and clearly that's sufficient to take them some way towards continuing the development of the mine. But the capital expenditure of around about 130 million euros will have to be raised.
You see,
and there's no indication yet of how they're going to do that.
Yeah. To me, this is like they are at. Do you remember when we looked at, let's say, Altus, and they had that great chart of the value valley, and how the valuation of mining projects, peaks just before they get the financing, and then you have years in which you have to give away quite a lot of the project to get financing, and you're basically producing no revenue, but you're racking up costs. But it seems to me that Zinnwald are kind of at the start of that downward shift.
So they may be, Keith. They think they can get the mine operational in less than 2 years, which suggests, that was in their feasibility study, and that suggests 2 things: one, that it's actually not too difficult to get it moving, and secondly, they will probably only do 1 or maximum 2 rounds of fundraising. Because do any more in that time scale wouldn't make sense. Yeah.
The other thing is, I just think that Bacanora owns a huge chunk of this project, is also fully funded for its lithium project in Mexico, and it's cheaper. I just think Bacanora Lithium is a cheaper way in. I mean, I realize it's more risky, but the other thing is, if you look at the share price of the two, Zinnwald has shot up recently, and Bacanora hasn't. He's kind of gone off a bit. and Bacanora actually have funding. So I personally have bought some Bacanora lithium.
Oh, well done. And I personally own some Zinnwald Lithium. And I agree with you. Obviously, it does look as if Bacanora is cheaper. I don't know very much about their Mexican lithium project, and I'd like to know a little bit more about that.
So why don't you do it next week, Richard? He says, trying to palm off some work on you.
Thank you, Keith.
So anyway, so in summary, I think it looks like there is a good project here that if they can pull it off, and bear in mind they're building it in Europe, which is, obviously a high environmental standard jurisdiction, and so there may well be costs associated with developing the mine in Germany. But if they pull it off, then the shares look good value, but there may be a cheaper way in via Bacanora. Great. Okay, well, thank you, Richard.
So thank you for listening to Portfolio Matters Share Talk. We hope you enjoyed it. We very much like you to press like if you did, and please subscribe to the channel if you like it. We want to increase our numbers of subscribers. And it's goodbye from Keith Jordan.
It's goodbye from Richard Wheater. Goodbye.
Goodbye. Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.